Purpose of preparing a purchaser's ledger control account is to find the closing balance of the trade payables. So first of all, you enter the opening balance of the trade payables as at year 1/1/2000. So the opening balance of trade payables is usually having a credit balance. Therefore, we find the total of 100, 200, 400 and 200 ABCD, which gives the value of 900. Now this goes as the opening date along with the details as balance brought down. Now we had completed the first one. So I'll color code all the information green which appears on the credit side. Now it's time to enter the details into the purchaser's ledger control account which took place during the year ended 31st/12/2000. So the first transaction is purchases on credit 6,000. So purchaser's account will be debited, whereas you credit the purchaser's ledger control account. So you write the end of year date along with the opposite account's name, which is credit purchasers, along with the amount. So let me color code all the credit side. Okay, I'll color code it later. Fine. Now let's move into the second one, which is payment to the credit suppliers. So when we make a payment, what happens is we credit the cash or bank and we debit the purchaser's ledger control account. So the entry goes as end of year 31st/12/2000, details as cash or bank because we do not know whether the payment is made by cash or bank. So it's better to write cash or bank, and then you write the amount, which is 1,200. Now let's move into the next transaction, returns to credit suppliers. This is basically a purchaser's return. Purchaser's returns usually has a credit balance. Therefore, in the purchaser's ledger control account, we enter it on the debit side. So you can find the date, opposite account's name, purchaser's returns, along with the amount 400. Now the next one is to include the interest which is charged by the credit suppliers. So this is basically an expense for us because the interest is charged by the supplier for not making the payment on time. So interest expense debit, whereas in the purchaser's ledger control account, you credit it. The last information is set off. So set off works against the trade receivables and payables, whereas set off we enter it on the debit side of the purchaser's ledger control account, which will be credited in the sales ledger control account. Now, let me color code all the debit side with yellow and then the credit side with green to make a differentiation. Now, the next step is to balance off the ledger. As you can find that the credit side is greater than the debit side. Therefore, we bring down the balance of the credit side to the total. Now from this 7,000, we take away 1,200, 400 and 50. Therefore, it gives us an answer of 5,350. Now this is the carried down balance, which we write the end of year date 31st/12/2000 along with balance carried down. So if there is a carried down on the debit side, the brought down will be below the total. You can see this below the total. And you enter this on the credit side, 1st of Jan 2001 balance brought down, the same figure. You can see that the carried down balance is usually the same as the brought down balance.